welcome back to Crypto Saving Experts live streams where we talk about the latest cryptocurrency news and take a look at the markets so that we all know exactly what is happening. My name is Jess and we are running through the latest market data to see what's been happening in the markets over the weekend. Let me just share my screen with us so we can all see what we are looking at, and it's not me talking about a chart that you can't see again. Sorry for the delay there. There was a couple of camera issues, but it all seems to be fixed. I'm ready for today's stream. Let's take a look at Crypto Saving Expert, and we can see Bitcoin is currently sat at $23,410, and Ethereum is sat at $1,637. They have had a slight move to the upside in the last 24 hours, but it has been a red week overall for both these assets. So let's take a look at the price chart for Bitcoin and see what is happening. You can see here on the 1 hour chart, we've seen a bit of sideways action this weekend after we did see a move to the downside later last week. Let's get all of these lines off the chart so we can see them all clearly. We had this dump to the downside. So last week we were retesting that $25,000 level. We didn't manage to break through that, unfortunately, and we have been rejected pretty harshly now. So let's take a look at where the CME gap is for Bitcoin. This would have opened on Friday night at 10 p.m. UTC time. So let's get this right. This will have opened around here, 23,114. And then we opened again. In fact, let's just make this simpler and take a look at the BTC1 exclamation mark, I think it's called. Let's take a look. Here it is. You can see this CME gap has actually been closed at this point, I would say. We had the CME gap open. Actually, no, it hasn't. The CME gap, opened here on the $23,190 level. We've came and seen a move to the downside, but we haven't actually closed that gap yet. We have a gap here that is from the $23,375 to the $23,455 level. That gap hasn't been closed. That's something we should be aware of and look at on the Bitcoin chart this morning. Let's take a look at some indicators and see what we are looking at. On the 1 hour chart, the RSI is looking pretty neutral. On the 2 hour chart, neutral again. On the 4 hour chart, neutral again. Let's take a look at the MACD. We have the MACD showing that it has weakening bearish momentum on the 1 hour, weakening bullish momentum on the 2 hour, and weakening bullish momentum on the 4 hour. So both of these indicators are pretty neutral right now. We are just seeing some sideways action over the weekend. So this is what we'd expect on those lower time frames. When we've seen pretty neutral action, then we see pretty neutral indicators. But that is what we are looking at here on the Bitcoin chart, waiting to see which way the markets are going to move this week. It's a very interesting week, and it's a very interesting time to be within the markets right now. It's a very enjoyable time to be within the markets. So if you do enjoy these live streams, please don't forget to like and subscribe and press that bell notification button so that you don't miss these daily live streams where we talk about what has been happening in the markets. Now, we have a huge amount of cryptocurrency news to discuss today because obviously it's been the weekend and we need to recap everything that's been going on. So we will skim through a couple of articles, but we'll get right into the good stuff. The first one we've seen, a man has been charged for allegedly running an illegal crypto mining operation in a school. So he has been illegally using a school's electricity to mine Bitcoin and profit from that. Obviously, he is now being charged. So that's what we're looking at here. We can skip past this pretty quickly. We have seen earlier last week that Binance closed a huge amount of people's positions if they were from Australia, and their positions were liquidated, and the price of Bitcoin tanked momentarily because of this sell-off. So we saw a dip in the price of Bitcoin following this. And Binance have forced out Aussie derivatives traders. And this is what we saw. We reported on this on Friday's live stream. But now we are seeing that Australian regulators have launched a targeted review on Binance after it closed their users' positions. So Binance are trying to cooperate with the regulators and decided that they would close out derivative traders in Australia because it wasn't that they're not allowed to, essentially. And now Australians regulators are saying, well, you're not allowed to just close people's positions like that either. So very interesting. At least 500 Australian users were affected because they were incorrectly classified as wholesale investors on Binance. And though Binance said it was required under the Australian regulation to inform these users and close any of their own derivative positions with immediate effect, the ASIC said the matter was not reported to them. So Binance have tried to comply with regulations happens, and the regulators have said, no, you can't do that. So interesting here. Obviously, Binance haven't done it in the best way. Binance should have had this all in order beforehand and can't just liquidate loads of people's positions out of nowhere. I mean, they have, but then trying to get on side with the regulators has gone back in their face so far. Let's move on to the next article and we see what we have next. Bitcoin CME gap is at $20,000, continues to haunt its push to 30K. So we take a look back at this. We do have a CME gap down at $20,000, and this is from, let's find it. Let's see where we can see it. It's over here. Back in January this year, let's take the horizontal lines and get some across here. So this is the CME gap we are looking at. This was a CME gap created on the weekend of the 16th of the 13th of January. We have seen price action. So a CME gap, let's explain. The CME is the Chicago Mercantile Exchange, and that exchange is operational Monday to Friday. So on a Friday, when it's not operational, we don't see any movements on the price chart for CME assets. And then the markets open again on the Monday, and it's very, very common that the gap that is created within the markets acts like a magnet for that price. And therefore, we like to see the markets trade within that price range once again, and when it does, that's called filling the gap. So now we have a CME gap down at $20,000, and we haven't filled that gap yet. We haven't traded within this range that we saw over the weekend. Now, obviously, because we close on a Friday and open on Monday, the price just jumps because Bitcoin is tradable 24/7. So we create this gap in the market, and this is what we're looking at as a magnet for the Bitcoin price. But if we were to go onto the daily chart and see what's happening over here, we also have a CME gap up at $28,800 as well. And this is also acting like a magnet for the price of Bitcoin. So that is what we're looking at here. If we just delete this one here so you can see clearly, you can see we have a CME gap here, we have a CME gap here, both acting like magnets for the Bitcoin price. At the end of the day, Bitcoin likes to take the path of most pain. So if loads of people are opening short positions right now, we could in fact close that CME gap at the top. And if loads of people are opening long positions right now, we could in fact close that lower gap. So it just depends on the markets. What I like to do is a good indicator is go to the Fear and Greed Index and see what's happening over there. Let's take a look at this. We currently have Fear and Greed at exactly neutral 50. No indication there of which direction we're going. All of the indicators are neutral this morning so far on what we've looked at. So we'll just have to keep a close eye on the charts and tune into these live streams daily so you can hear our analysis, our update, what's happening in the news, and see if we have any indications throughout the week of which direction we're going to go into. Let's take a look at the next article now. I mean, we've recapped that already without even reading through the article, but I think it's pretty clear. Let's take a look at the next one. We have rocket emojis in crypto. Could get you into trouble with the law in the US. So a US judge has ruled that popular emojis used in crypto, such as flying rocket ships, bags of money, and charts showing an uptrend, could mean one is hoping to get a financial return on investment. The crypto and NFT communities on all major social media platforms such as Twitter, Discord, and Telegram often go about their chats and posts about using emojis with little thought about their consequences. And the US District Court judge for the Southern District of New York has ruled that such popular emojis mean that their users hope to gain a financial return on investment, and those who buy certain digital assets should expect profits. So the ruling was made in court filing regarding a lawsuit with the lead plaintiff, Gary Luce, against Dapper Labs and its CEO, claiming that the company violated securities laws through the sale of NFTs known as NBA Top Shot Moments. And the judge ruled that the defendants made public statements and sharing marketing materials that led purchasers to expect profits. In particular, Dapper Labs, through its NBA Top Shot Twitter handle, made several tweets with emojis that gave the impression that buyers of the NFTs would make profits. So the court document has said each tweet promotes a recent sale or statistics of recent sales of moments on the marketplace. And although the literal word profit is not included in any of the tweets, the rocket ship emoji, stock chart emoji, and money bags emoji objectively mean one thing: a financial return on investment. Very interesting news article here. These emojis thrown around a lot on Twitter. It's an emoji. We'll move on from this article pretty quickly. There's nothing more to expand on that. It's interesting, but it's an emoji at the end of the day. Let's take a look at the next one. This is what we have. On today's thumbnail, we have Spotify testing NFT gated playlists. Now, the reason this is an important story, I will tell you after you please like and subscribe before I forget. Please do like and subscribe. We are trying to grow the channel as much as possible. The reason I'm interested in this story is because I'm really, really intrigued by the different ways we can get people from Web 2 to Web 3. And this is a really, really tough battle that we're facing right now. We are all still incredibly early into crypto, in my opinion, and getting users from Web 2 to Web 3 is just as difficult as getting users from Web 1 to Web 2. So we need to work out a way that we can transition people over. Many ways have been, loads of things get people into Web 3. For example, meme coins are a great way to get people into Web 3. The profits that people can make in the industry is something that attracts people into cryptocurrency. Another really interesting thing that is attracting people into Web3, as much as I hate them, is NFTs. We saw Reddit do a collection of NFTs, and you could just buy them with your credit card, like you could do any other, like when you're buying a clothing brand or something and you buy a clothing item, you could buy these NFT digital collectible art things basically from Reddit, used in the same way, just using your card. But if you wanted to sell that collectible, you had to use an NFT marketplace. So this onboarded loads of people into Web3 as well. I'm just saying the different ways that we can get people into cryptocurrency is really, really exciting and really interesting, because this is how we need the space to grow. We need to see that adoption. But there is a huge issue with getting people into cryptocurrency, because it's turned into this whole word that people just think, no, I can't even begin to learn that. I'll never understand it. And people have really fear away from the world of cryptocurrency because they just don't think they'll ever understand. So having different ways to get people into the cryptocurrency space is really important, and seeing the different ways mainstream companies are doing so is really, really exciting. And that is also the reason that we made Crypto Saving Expert, because there's no real free education that can guide you through step by step how to get into the cryptocurrency space and what the cryptocurrency space is. So that's why we made Crypto Saving Expert. It's absolutely free. If you haven't been over to the website already, make sure to go to cryptosavingexpert.com, press that big blue sign up button, just fill in your details, and you get access to the entire website completely for free. We don't even have like all those flashy banner ads on the side. It's the most clearest website possible, and it's just it's come together very, very nicely. But let's take a look at this article anyway. We haven't even got started in the article. The music streaming provider Spotify recently announced its latest interaction with Web3, a testing event for NFT gated playlists. And Spotify, which is the biggest streaming platform in the world and is a Swedish private company founded on the 23rd of April 2006, in December 2022, Spotify recorded 489 million active monthly users, 205 million were paid members, positioning Spotify as the world's biggest music streaming service provider. We are now starting to see the first interactions of the platform with NFTs in token-enabled music playlists. Now, I actually would recommend, if you go on Netflix, there's a really good not documentary, it's like an actual show, but it shows you how Spotify was founded and created and how it became the business it is today. And it's a really interesting series. If you, I thought I'd just mention that. Several NFT projects, including Fluff, Overlord, Moonbeams, and Kingship, are participating in the pilot, allowing holders from each project to test out a distinctive crypto integration with the streaming platform. The service gives members of those communities access to a Spotify playlist by connecting a crypto wallet holding one of the Ethereum NFTs. So these curated playlists will be tested across a 3-month period and will see frequent updates. The playlists will only be accessible to community members via a unique URL, and these playlists will not be accessible to all NFT holders, just Android users in the United States, UK, Denmark, Australia, and New Zealand. And a Spotify spokesperson said to CoinDesk that Spotify regularly runs several tests to improve user experience. Some tests can ultimately pave the way for further development, whereas others serve as learning exercises. This is not the first interaction of Spotify with Web3. In May last year, the company confirmed to the media outlet Music Alley that some musicians were testing a tool to advertise NFTs on their artist profiles, which was one of the Web3 connections Spotify started testing last year. Earlier in 2022, the company had several job postings mentioning Web3. So they are looking to get involved in the space, and it's really important that they do. The music industry has a really bad name for not paying their artists the right amount, and within Web3, we do have tools like Audius, I think it's called, where it allows users to earn directly from listeners listening to their music. Where music is definitely an industry that the blockchain technology can disturb. So by Spotify getting in early and testing all of these features and seeing how they can utilize blockchain and get involved in Web3 is really, really important, because some of these companies, however big they are, may get left behind if there's more beneficial options for both listeners and music creators. Let's take a look at the next article now. Before we do, please don't forget to like and subscribe and press that bell notification button so that you don't miss the latest cryptocurrency news. We do these live streams every single weekday talking about everything that's going on in the markets. Let's take a look at this next one. Solana could dip below $20 after recent network fork. So the Solana network experienced an anomaly early Saturday that caused the blockchain to fork. The blockchain has had a long history of interruptions, and the most recent could trigger a brief selling event to $20 or below. Let's take a look at Solana right now. Let's duplicate this tab so we don't miss it. Let's see what's on here. Solana, let's see what's going on. Sounds interesting. Over the weekend, we did see this huge dip to the downside. I mean, that's a pretty nice trade to be involved in if you see something like this taking place. We saw a percentage loss of 5% in the markets. It has rallied back to the upside as of late Saturday night. A lot of people would have took that opportunity to buy the dip. This isn't a token that I'm particularly interested in anymore, but obviously nothing is financial advice. Those people have still definitely benefited from this scenario that bought the dip. Let's take a look at this. So the Solana network experienced a network incident early Saturday that caused the blockchain to start forking, thus creating conflicting incidences of its transactional history. According to a CoinDesk report, the network anomaly started at around 5:53 a.m. UTC, resulting in the increase of validators' RAM and a slowdown of transactional throughput. And by 7 a.m., Solana's on-chain activity had reduced significantly, with the network processing an estimated 93 transactions per second instead of its designated rate of around 50,000 transactions per second. At the time of writing, validators were reportedly downgrading their software to see if network activity can be restored to normalcy. So Solana could dip below $20 due to the recent network fork. Now, Solana has had a couple of issues like this. We've seen the network go down a couple of times over even just the past year, and this has created a lot of concerns within the cryptocurrency industry. They are working on this, but obviously this is a big concern, and that has had an effect on the price of the assets. That is what we are looking at right now. And Solana still hasn't recovered from when FTX collapsed. So FTX were major holders of Solana. Let's see this. The bounce will likely follow could allow Solana to continue attempting to raise all losses due to the collapse of FTX in November last year. Both companies were known to be huge backers and holders of Solana, and retail investors are looking to put the unfortunate events of 2022 in the past. So FTX and Alameda Research were big fans of Solana, invested huge amounts of Solana, had a huge percentage of the circulating supply of Solana. So when FTX collapsed, a lot of people just dumped their Solana tokens. A lot of people like me shorted Solana. And that was a profitable trade because a lot of people were scared that FTX may have to liquidate their assets and therefore dump a huge percentage of the Solana tokens into circulation, pushing the price of the asset down. And Solana still hasn't really recovered from this. If we take a look, we can see on Solana, let's go to the daily chart, the FTX crash was back in November around here. So at around $32 for Solana. We are now still trading at 22. We have had a high up at 27, but we still haven't erased those losses. We have done on the Bitcoin and the Ethereum charts and many of the different major altcoins, just not for Solana because it was so heavily intertwined with the companies. So let's take a look at the next article anyway. We have Crypto 101 liquid staking. So we have articles over on Crypto Saving Expert. I just wanted to pull this up quickly to show you how in depth we go in our articles and how you can learn through our news section as well. We have not just the news, we also have articles explaining different things within this space as well. So make sure to check those out. Also, if you want to know anything about cryptocurrency and you don't know what any terms mean within the world of cryptocurrency, just go over to our A to Z and choose any of these words in any of this list, and then you can have a short description, you can have a video explanation by me, or you can have a full article read as well if you want to learn a little bit more in detail. As I said, everything is absolutely free. Just make sure to go to cryptosavingexpert.com and press that big blue sign up button And make sure to go over and like and subscribe for today's stream as well to help us with the algorithm to grow the channel as big as possible. Let's take a look at the next article we have here now. Let's take a look at this. US Congressman Tom Emmer introduces bill to limit government's authority on central banks' digital currencies. So central bank digital currencies don't necessarily have to be cryptocurrencies. They are just digital versions of fiat. A lot of people are concerned over the control it will give our governments. So this central bank digital currencies are digital currencies. They can be programmed to do specific things. Now, there are some people saying that will take complete control, maybe have expiration dates on our funds, so we can't hold funds in our accounts for over a certain period of time, and the money could just expire and be unusable. There are others saying we may be looking at having limitations on how much we can buy of specific types of things. But that is what we are looking at right now. The central bank digital currencies and the government's are obviously saying this isn't the case. We're just looking to move forward. I mean, it is 2023. Having digital currencies is something that is incredibly likely to happen, in my opinion. We're not going to be walking around with cash for the rest of our lives. Everything is getting digitalized, including our money. Let's take a look at this. The United States Republican House Majority Whip Tom Emmer recently introduced a bill to limit the federal government's authority over a central bank digital currency, otherwise known as the digital dollar. So Emma has tweeted the bill titled CBDC Anti-Surveillance State Act, seeking to limit the efforts of unelected bureaucrats in America from preventing citizens from exercising their rights to financial privacy. So he stated that the bill seeks to accomplish 3 tasks in his proposed amendment to the Federal Reserve Act. One proposed rule is that the Federal Reserve would be prohibited from offering products, services, or CBDCs directly to any individual. Any digital version of the dollar must uphold our American values of privacy, individual sovereignty, and free market competitiveness. Anything less opens the door to the development of a dangerous surveillance tool. Furthermore, the bill wants to prohibit the Board of Governors of the Federal Reserve System and the Federal Open Market Committee from using any CBDC to implement monetary policies and control the economy. So he said, after all, America remains a technological leader, not because we force innovations to adopt our values under regulatory duress, but because we allow technology that holds these values at their core to flourish. And so obviously we know that this senator is a very big cryptocurrency fan and continues to try and help the space get regulated in the best ways possible. Central bank digital currencies, as I said, are a huge concern to many, and a lot of people are worried about how they will be able to manage their finances in the future. Having bills like this does give that little bit of confidence back into citizens, but it's still something, I mean, it's inevitable that central bank digital currencies are something of the future. Having digitalized everything is something that we should expect. It's just another thing after another thing. Let's take a look at the next article we have here. We have the Bank of Israel releases principles for regulating stablecoins. So we've seen a lot on regulation of stablecoins in recent weeks after we saw the USD get targeted by the SEC. And then there were a couple of rumors about USDC receiving a Wells notice, but they've said that wasn't true. We're just seeing the regulation of stablecoins tighten following UST's collapse in May 2022. We've also seen the UK say that we may not be able to label stablecoins as a stablecoin in the UK, which I think is just making education really, really difficult. But let's take a look at this article anyway. The central bank said that the regulations aim to manage the risk of stablecoins and adjust consumer protections while such assets are in use. So stablecoins have always had concerns around them. We have USDT, which is the biggest stablecoin in terms of market cap. Then we have USDC and BUSD, all major stablecoins, and the transparency around the backing of these stablecoins has been an issue since the start, specifically USDT. It's had a huge amount of concern around it. But in the end of 2022, at the end of last year, it had what seemed to be transparent and sufficient backing. But the way they back their token has been arguable over the last couple of years. As long as it's all in order now, though, that seems to give a little bit of confidence. If USDT or any of the other stables collapse, that would be the worst thing in the world for cryptocurrency. Let's take a look at this. According to official release, the principles proposed in the document apply to regulations regarding the activities of stablecoins issuers in Israel, their licensing and oversight arrangements. So the central bank disclosed that the rules aim aim to manage stablecoin risks and ensure consumer protection through legislation while allowing activity in the asset class. Most importantly, stablecoin issuers would be licensed by the Capital Markets Authority or the Banking Supervision Department, as their products do not have any systematic importance. The principles also seek to ensure that stablecoin issuers in Israel hold 100% reserves of all their assets in circulation. The bank believes this would curtail the prudential risks of using stablecoins. The bank shared that its payment system oversight function would handle stablecoins deemed fit to be part of the controlled payment system. And in contrast to other digital assets, stablecoin have the potential to serve not only as an investment asset, but also as a means of payment. And the Bank of Israel's function, as defined in law, requires the Bank of Israel's regulation and supervision of means of payment. So we do actually have a whole course over on the Crypto Saving Expert website. If you go to the course section, Crypto 101, you see we have a stablecoins course here, which can teach you all about the different stablecoins, how they work, the benefits of having stablecoins. A major benefit of having a stablecoin using stablecoins is you can make cross-border payments incredibly quickly with incredibly low fees, which just isn't doable for most of the when compared to fiat currencies. It's just so much cheaper, so much quicker, and so much easier to do. So we have a whole course here discussing the different stablecoins, the benefits of them all, and the problems that we see with stablecoins as well. It's a very interesting course. I gave that a read through over the weekend. Let's take a look at the next article we have here. Jump Crypto counter exploited the Wormhole Bridge exploiter and recovered $225 million in assets. So according to a report recent from Blockworks Research, Jump Crypto and Oasis counter exploited the Wormhole Bridge exploiter and recovered $225 million in assets. Before we get into this stream, please don't forget into this article to like and subscribe and press that bell notification button to help us grow the channel as big as possible. And we're doing really well today. We're already on 25 likes for today's stream, so please don't forget to continue liking and helping support the channel. Let's see what's happening here and how the funds were recovered. So an Ethereum decentralized application has been used by the Wormhole exploiter to move the stolen money around to hide their assets. And their last attempt to shuffle funds involved a WST ETH vault opened on January 23rd and an RETH vault opened on February the 11th in the Oasis vaults. And using these vaults, the exploiter borrowed DAI and leveraged long ETH staking derivatives between January 23 and February 16th. By February the 16th, a combined $78 million in DAI debt had been drawn against $220 million in security from the two vaults. And the usage of Oasis's automation service was significant for both vaults. And the counter exploits utilized 5 different wallets. Essentially, the hacker had some, and then the hackers took it from the hackers. So we are in a win here. This is a pretty exciting article. I like to see news like this. Let's take a look at the next one there. We have had a huge amount of news today, and we've got a huge amount more still to go through. We have the IMF warns crypto adoption could undermine the international monetary system. So they've released a paper that provides a 9-point action plan on how countries should approach cryptocurrencies. The agency cautions against rapid crypto adoption as it would undermine the international monetary system. Now, this is what I like to see. I like to see, a paper that provides a 9-point action plan. We want to see clarity around cryptocurrencies and how the governments are seeing how they can deal with the space, how they can regulate it, and how they can grow. So we see here the IMF has been closely monitoring the rate at which countries worldwide are warming up to digital currencies. It has therefore cautioned against their rapid adoption without the accompanying policies to regulate them. Earlier this week, the agency released a paper on elements of effective policies for crypto assets that guides IMF member countries on how to respond to the growing popularity of crypto assets through appropriate policy. And the paper's objectives are in line with the IMF's mandate to support economic and financial stability across its membership. The agency quoted last year failure of several crypto exchanges, the actions of rogue actors, and the collapse of specific crypto assets as the main reason why they need a coordinated effort to put in place effective policies for crypto assets. And the IMF observed that the supposed benefits of crypto assets are yet to materialize and significant risks have emerged. It cautioned against crypto adoption as it would undermine the international monetary system. So they've said the global agency have wrote the widespread adoption of crypto assets could undermine the effectiveness of monetary policy, circumvent capital flow management measures, and exacerbate fiscal risks. Widespread adoption could also have significant complications for the international monetary system in the longer term. So they've created these 9 points as a way for possible crypto policy framework. So they could have strengthened monetary policy frameworks to safeguard economic sovereignty and not grant cryptocurrencies legal tender status, prevent crypto capital flow volatility, and implement effective capital flow management measures. Analyze and disclose fiscal risk and tax crypto assets, legally define crypto assets and address legal risks, create and enforce oversight requirements for all crypto market participants, create joint monetary frameworks across all domestic agencies and authorities, collaborate with other countries on the supervision and enforcement of crypto regulations, monitor the impact of cryptocurrencies on the stability of the international monetary system, and increase global cooperation for the creation of digital infrastructure and alternative ways for cross-border transactions. Now, although this seems like a really negative thing, they are trying to understand and classify the different cryptocurrencies and understand how they can make all clear how everything is so far, so they can understand how to regulate things in the correct way. And this is something we need. We need clarity within the space. We are seeing a regulation coming, but we need that clarity so we can understand how to position the industry in different projects in the best way possible so that they can continue to grow. But without clarity, we don't have that. Hopefully, they are light on the industry and they allow the industry to grow in the correct way. But they do need to be careful on that. But clarity is something we need within the space, and it's going to come with a lot of fights. I think it's going to be, some people are pro cryptocurrency and want to leave it room to breathe. Some people are very, very against cryptocurrency and want to try and shut it down in the harshest way possible. So we need to find a way that the industry can still grow, and there's clear information and guidance on how we can best regulate the space. Let's take a look at the next article we have here. Crypto investors lost over $650 billion after 2 major scandals last year. Before we get into today's stream, please don't forget to like and subscribe and press that bell notification button to help us grow the channel as big as possible. We are currently on, it's loading, 29 likes for today's stream. Let's try and get to 50 by the end of today's stream. Please help and like and subscribe and press that bell notification button. We are trying to get the channel to 100,000 subscribers by the end of the year. We are currently on 2,659, so please don't forget to hit that subscribe button and the bell notification button as well. Let's take a look at this article. A new report published by the Bank of International Settlement found that crypto industry lost up to $1.8 trillion in value due to the market crash that stormed the industry last year, with retail investors losing more than $600 billion worth of investments. Now, I think it's clear to say a lot of people lost a huge amount of money last year. The markets were in a downfall. This is what we see every single bear market. But as long as we all come back stronger, that is the main thing, is looking at the turbulence of last year. We can skip through this article quickly. Let's take a look at the next one. The environmental impacts of cryptocurrencies and why it matters. Again, another very informative article by a crypto saving expert. You can take a look at this. I am going to skip past this today because we have lots and lots to discuss. We need to catch up on everything that happened over the weekend. The US judge has dismissed $28 million Black Thursday lawsuit against DeFi giant Maker. So, a US judge has approved a motion to dismiss a lawsuit accusing the Maker Ecosystem Growth Foundation of negligence and international misrepresentation of the risk associated with its DAI stablecoin. As a DeFi protocol, Maker was designed to allow users to mint its stablecoin DAI against Ether deposits at a margin of around 75%, with a fixed liquidation price to ensure the collateral held by the platform exceeds the outstanding DAI supply. And Maker suffered a meltdown in March following a market decline that saw ETH plunge to more than 50% in less than 2 days. The drop liquidated users' positions, which led to the loss of millions of dollars. And on Black Thursday, the Black Thursday lawsuit, which sought after $28 million in damages, claimed that Maker affiliates, including the Maker Ecosystem Growth Foundation, purposely concealed the length of the risks associated with using the DeFi protocol in its terms of service to lure investors onto the platform. The suit argued that the protocol falsely represented collateralized debt positions on the platform as more secure investments than other assets because they required over collateralization. And according to a new report document filed in the United States District Court for the Northern District of California, they've dismissed the case because the Maker Ecosystem Growth Foundation could not stand as a defendant since it was dissolved. So in July 2021, the company adopted the idea of decentralization and transmitted into what is now known as a MakerDAO, a DeFi ecosystem governed by a decentralized autonomous community. Maker Growth is not a proper defendant because it's been dissolved and cannot therefore be sued. And the judge also said that the lead plaintiff had failed to provide sufficient facts to support his relief claims. And the judge has been given until March 17th to amend the complaint and file another version, as there is no showing that the dependencies noted above cannot be cured. And so that is what we are seeing over here. Again, interesting story, but not too much to develop on this. So let's move on to the next one. The FDIC, the annual report shows 136 US banks are involved in cryptocurrencies. So the banks in the United States are actively engaging with the asset class by offering crypto-related products and services to customers worldwide. Before we get into this article, please don't forget to like and subscribe and press that bell notification button to help us grow the channel as big as possible. We are trying to get to 100,000 subscribers by the end of the year. We do these live streams every single weekday to keep you up to date with the latest news and market analysis as well. Let's take a look at this article here. So we have, according to a recent report released by the Federal Deposit Insurance Corporation, more than 130 FDIC insured banks in the US have joined the crypto bandwagon, with others planning to engage with the industry. Some banks already offer crypto-related services in the US, and the annual report published by the FDIC's Office of the Inspector General this month addressed essential issues challenging financial regulators. One of the challenges identified in the report was supervising the risks possessed by digital assets. And the FDIC disclosed that up to 52 million people in the US are crypto enthusiasts with significant investments in the crypto sector, despite the inherently volatile nature of virtual assets. We are still seeing adoption within the space. Let's take a look at the next article we have here. We have two final articles for today's stream. Let's take a look at this one first. This one's pretty interesting, and then we'll take a look back at the price of Bitcoin and talk about that final article about how traders are performing in this market and whether we have a bear market bottom signal. Let's take at this one first. Huobi and KuCoin have reportedly allowed the use of debit cards from sanctioned Russian banks. So the US and Europe have continued to impose economic sanctions on Russia since Russia invaded Ukraine last year and its financial institutions and its citizens in an effort to exert pressure on its top leadership to consider easing or ending its activities in Ukraine. And multiple Russian banks have therefore been sanctioned, including Alfa Bank, Central Bank of the Russian Federation, Credit Bank Moscow, and a couple of others. The sanctions have resulted in a ripple effect, with many crypto exchanges blocking financial transactions related to these banks. But a new report has said that KuCoin and Huobi continue to allow transactions using debit cards issued by sanctioned Russian banks, giving them a gateway to get into the cryptocurrency space and out of the cryptocurrency space, allowing those Russians to still have a fiat on and off ramp. So we've Bloomberg have asked for comment from KuCoin. And they've said KuCoin does not support the withdrawal and deposit of the cards issued by Russian banks, the CEO said. And as an exchange registered in Seychelles, we abide by the laws and regulations of Seychelles. We also respect the laws and regulations of other countries. If there are suspicious transactions that needed to be investigated, we will voluntarily cooperate. So we have seen them deny that so far. And we can see here, Huobi and KuCoin both allow transactions with Russian banks via their P2P platform that are sanctioned by the US, Canada, UK, EU, and others. So KuCoin have denied this. Interesting to see here, Huobi has still not made a comment on this just yet, but we'll keep up to date on this story and see what is happening. Before we get into the final one of today's stream, please don't forget to like and subscribe and press that bell notification button to help us grow the channel as big as possible. Let's take a look at this final article here. Crypto traders are selling at a loss for the first time in 2023. So we are seeing capitulation. As we said at the start of today's stream, we are at a fear and greed index this morning of 50, which is completely neutral. Bitcoin and Ether traders are beginning to exit the market in a loss, according to on-chain data by Sentiment. This is the first time such a pattern has been seen among traders this year, in which the majority of cryptocurrencies have traded on the upside. So far in 2023, the price of Bitcoin has risen over 40%, erasing the losses recorded from the cascade of liquidations in November induced by the FTX collapse. But now it's currently up over 36% year to date. In recent weeks, however, many coins, including Bitcoin and Ethereum, have remained range bound. And following Sentiment's data, this would mean that most traders are gradually losing confidence in short term price movements. And more evidently, Bitcoin's fear and greed index reads 50. So if we take a look at this article, we have some Bitcoin analysis over here, but let's do some live Bitcoin analysis here on the live stream instead. Let's take a look at this. If we take a look at the 4-hour chart, we have currently been rejected at that previous level of support at $23,700. We have bounced at the $22,720 level over the weekend. This is what we are watching out for. As we said at the start of today's stream, we have a CME gap up at $28,800 and we have a CME gap down at $20,000. So they're both acting like price magnets for the Bitcoin price. And we're holding on to this range in the middle now, waiting to see what happens next. We have been strongly rejected from that $25,000 level once again, $25,250. That level is, to be precise. It's previously acted as a support here and now as a resistance multiple times over the recent week and previously back in August as well. So we're waiting to see if we can break through that. But I think if we do break through that $25,250 level, we could have a really nice couple of weeks. And that is very, very exciting. But that is all we have for today's live stream. So thank you very much for tuning in once again. I hope you have enjoyed, and I will be back here tomorrow with another live update. So hopefully I will see you then.